Thanks for joining us for the Purdue University CME Group Ag Economy Barometer results from the March 2021 survey. I'm Jim Mintert, Director of the Center for Commercial Agriculture, and I'm going to review the highlights of this month's survey. The Ag Economy Barometer rose 12 points to a reading of 177 from 165 a month ago. That's the highest reading we've had since last fall when the barometer peaked just before the election at a reading of 183. The improvement in this month's Ag Economy Barometer was really derived from an improvement in the Index of Future Expectations. That index rose 16 points to a reading of 164 this month, and that's the highest reading we've seen on that index since last fall. The Index of Current Conditions rose slightly to a reading of 202 versus 200, so the real driver in the improvement in the barometer was really from the Index of Future Expectations. Farm Capital Investment Index held steady with a month earlier at a reading of 88. That's slightly below where it was last December when it had a reading of 93, but still one of the strongest readings we've had on that index since we started collecting data in 2015. There was a small improvement in the plans for farm machinery purchases. 11% of the respondents in this month's survey said they planned to increase their purchases compared to 9% a month earlier, and that came about because there were fewer farmers that said they planned to hold their purchases constant. The short-term farmland value index rose to a record reading of 148 versus 145 a month earlier, and all the way up from 84 this time last year. The long-term farmland value expectations index also rose to a reading of 157. That was a 4-point improvement compared to a month earlier. And again, when you compare it to last year, that reading was just 129. The Farm Financial Performance Index rose 4 points this month to a reading of 125 versus 121 a month earlier. And the strength in that Farm Financial Performance Index really probably explains much of the strength we're seeing in both that short-term and long-term farmland value index. In contrast to optimism expressed elsewhere in the survey, farmers are less confident that the trade dispute with China will ultimately be resolved in a way that's beneficial to U.S. agriculture. At the beginning of 2020, 80% of the farmers in our survey said they expected to see the trade dispute resolved in a way that was beneficial to U.S. agriculture. That percentage was declining throughout most of 2020 and declined again in this survey to just 31% of the producers expecting to see a beneficial outcome to the trade dispute. There continues to be a lot of interest with respect to carbon sequestration on farmland in the U.S., and so we continue to ask questions on that of our respondents. Between 30 and 40% of the survey respondents over the last 3 months say that they are aware of opportunities to receive carbon sequestration payments on their farms. A small percentage of respondents, 7% on the March survey, indicated that they've actually engaged in discussions with companies about payments on their farm. Over 80% of those reporting that they engaged in discussions said that those payment rates were $20 per acre or less, and that was actually split pretty evenly between those saying that the rates offered were less than $10 an acre or between $10 and $20 per acre. And finally, just 1% of the respondents in our March survey said that they've actually signed a carbon sequestration contract. That wraps up our discussion of this month's survey results. The full report's available on the Purdue CME Group Ag Economy Barometer website, purdue.edu/agbarometer. And you can join us for our next corn and soybean outlook webinar coming up following the release of USDA's April WASDE report on Monday, April 12th at 3:30 p.m. Eastern Time. More details available on that webinar at purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.